Next, we're going to talk about wholesaler cash flow planning. And the takeaway here is that we really want to have an active cash management process. So we'll talk a bit about best practices, the main drivers of your cash flow, and scorecards that you can use to track and measure your key cash ratios. So to start, think about the techniques to keep cash management front and center. So scorecards can be a good way to do that. Looking at ways that money is flowing into and out of your business, accounts receivable and accounts payable, looking at your process there, and putting some daily, weekly practices into place so that you've got these routines. And what I'll mean by that is we covered in an earlier section the 8-week cash flow forecast. I think that's a great way to, at least on a weekly basis, you're looking at your cash position, you're looking at what's flowing into and out of, you're looking at trends, you're understanding, how money is leaving your business and how it's coming in, and what are the levers that you can pull to, increase the speed at which it comes in and decrease the speed at which it goes out. It's a very simple concept, but once you start digging into it, you can really make a big difference. And then lastly would be strategies to create an actual financing plan. We don't often think about the capitalization or the debt structure of our business until we need money or we have a problem. So really looking at, what is the debt that we have right now? How is it amortizing? What are the components of it? Is there a different way to go about this? Do we have a line of credit if we need one? Whether it's working capital or an equipment line of credit, which can be a great way to help with cash flow planning. The main drivers of cash flow really come down to these 6 buckets, and I'd also recommend a book. I'll put it in the notes here as well, that you might want to check out, that really kind of speaks in more detail to the things I'm going to talk about here. And that book is called Cash Rules: How to Learn and Manage the Cash Flow Drivers for Your Company's Success. Now, he has 7 cash flow drivers. I've got only 6 here, so you can choose 6 or 7 or however many are relevant. Some of these might not be relevant for your particular business, i.e. accounts receivable. If you're in a COD state, that might not be something that, is that you need to manage. But we're really looking at these 6 things: operating income, that comes from our income statement; inventory, accounts receivable, accounts payable, capital expenditures, and debt payments. So look at ways that you can really scorecard each of these. And the upshot here is if you measure, manage, and improve one or more of these items, you're going to improve your cash flow. So it's just that simple. So net operating income, that's our budgeting process. What is our net operating income now? Where do we need it to be? How can we get there? Looking at sales, gross profit, and operating expenses. Inventory days on hand is how effectively we're measuring our inventory. Do we have too much inventory? That's going to eat up cash. Do we have too little inventory? We're running out of stock and we're hurting sales. What's the right amount of inventory? Well, the days on hand calculation will show you that. Next is days sales outstanding, and this is related to our accounts receivable. So how many days worth of sales do we have outstanding and uncollected at any given time? And is that too much? Is it just right? How do we know? Days sales outstanding is going to help us determine that. Average days to pay relates to your accounts payable. Effectively, we're trying to answer the question is, are we paying too quickly? Are we paying too slowly? Are we paying just right? How do we know? This calculation is going to help us with that. Return on investment speaks to your fixed asset purchase or your capital expenditures. What are we buying and for trucks and warehouse equipment? And do we have a return on investment for those things? Sometimes we don't, but very often it's helpful to ask the question, if we buy these new trucks, what kind of return are we going to get? Well, what are we comparing it to? Well, maybe the maintenance on the old trucks, maybe the breakdowns, maybe the delays in service. How can we measure that return on investment? And lastly is debt service coverage ratio. This is going to relate to our loans and what we're paying out in loan payments compared to what we're receiving in for operating cash flow. And typically we'll compare this to our EBITDA number. So 6 scorecards you can use to measure and manage and really help develop your cash flow management plan. And again, if you improve on one or more of these, you're going to improve your cash position and really put yourself in a better position to run each of these aspects of your business.